to micros. Tata Steel will be declaring Q3 numbers. Nigel, what can we expect?
Well, the numbers will look good, but the commentary will be even more important, Anuj. So on the top line, in terms of the consolidated numbers, you're expecting more than a 50% growth. The EBITDA numbers likely to jump up by close to around 60%. Margins as well improve on a year-on-year basis. Remember, on a sequential basis, there'll be some pressure, and the profit number as well is going to be quite massive. But we always look at Tata Steel with regard to the breakup. India, and what about Europe? So let's start with the India business. We already have the volumes numbers with us. They're a little bit lower on a year-on-year basis. Two factors played out. One is weak domestic demand. Second factor is in the export markets. Well, prices were declining as well. So lack of push in terms of exports out there. Remember, the standalone numbers now include the Tata Steel BSL business. So they are unlikely to give a breakup between the two. So we're going to look at it as a standalone India business now. Traditionally, we should look at it at the core India business, and also, BSL used to be separate. Now, the factors that play, domestic realization should jump up by close to around 1,800 to around 2,000 rupees odd on a sequential basis. There will be a bit of a reset of the auto contracts, and that's what will help realizations, though the higher coking coal cost will hurt them. Remember, they are backward integrated with regard to iron ore, so no worries on that front. When the price fluctuation, though, is on the lower side, then they don't benefit as much, because in an upcycle, they actually do benefit. The EBITDA per ton, that's the most crucial number, 27,250. So that'll be skimming off a little bit, both on a sequential basis, as well as in comparison to Q1 as well. Tata Steel Europe, that's the other important number that should deliver a fairly decent set of numbers. The volumes numbers were fairly good. The problem is that, the production number gave you a sense that there is some inventory build-up. What plays out here? Yet again, realizations will be good. They'll benefit from lower iron ore costs because they're not backward integrated. Coking coal costs, though, that's moved higher. That'll hurt them a little bit. Crucial number, Europe EBITDA per ton of $200 per ton. Management commentary, very, very crucial. How are they going to manage this NINL asset? What is the debt reduction plan from here on? And what about the outlook on pricing and demand? So Tata Steel numbers tomorrow, post-market hours, I believe later in the evening is what will come out.
Okay, fair enough. We'll have